Hey everyone, it's Mike from Orderflows, and welcome back to my channel. Last few days I've been doing some videos on imbalances and their effect on the market. And order flow, in my opinion, is something that's very visual for a trader. We can see things in the order flow and make a quick decision. And thin prints is actually sometimes it's the result of an imbalance taking place in the market. Now, we know the market trades in a two-way auction, right? There's a bid and there's an offer. Okay, so for example, say the market is 80, 79 and 3/4 bid offered at 80. When it was trading in this two-way auction, there was actually nothing traded on the offer at 80. It left a zero. That's what I call a thin print. Here it's 52 against 1. When the market was 78, 78 and a quarter, only one lot traded on the offer at 78 and a quarter. And even at 80, when it was off, or at 78 rather, 64 traded on the bid at 77 and 3/4. Only one contract traded at 78. And again, lots of times it is the result of something that's left over in an imbalance. And, because an imbalance is basically, more volume trading either on the bid than the offer. Okay. So, by a ratio of like 4 to 1. So obviously when you get zero, and you trade at least, 5 contracts, you're going to be left with an imbalance, right? And really the important part of understanding thin prints is really it's a market that's, it's another sign of a market that's moving fast. And as a trader, you want to be alerted to these areas on the chart where there's lack of volume, right? I was talking about that last week. It's not always about reading the order flow, looking for big trades going through. You also want to see these areas where there's a lack of volume trading in the two-way auction. So it's one thing to have a big order going through, and that's important. However, you also got to be looking at how the big order is trading in the market. Is there somebody trading against it at the same time or not, right? Because at the end of the day, if all you have is a big order going through the market, and there's no counter trade, that's going to be important, okay? And what I want to show you guys is, if you're looking at a footprint chart, this is just a basic footprint chart, right? I don't have any value areas or any other tools up on here other than, basically your bid-ask footprint as well as, the point of control and imbalances. That's it, right? And thin prints was something that I've always looked for in the market, right? And I can see, there's a zero here. What does that mean? Well, that means to me that there was no counter trade, right? I mean, well, obviously it means there's no counter trade, but I know that this is, in a sense, poor order flow. It's, in a way, a gap in the bar. And you can see how the market sold off, came all the way back up, and traded right to that level, one tick past, and then continued on down. It repaired that poor order flow. Now, there's times where you'll have a zero print or, a thin volume print, and the market just comes right back within a bar or two and fills it, right? And it's sort of forgotten. But when you start identifying these on a chart over time, you start to see that these carry significance for traders. And, somebody asked me today, right? I was doing a training earlier today. Mike, what's the three, if you had to just pick 3 tools of order flow that you could just work with, right? You don't have to use anything else. What are the 3? One of them is thin prints. The other one's prominent point of controls. Other one, is sort of a tie between value areas and market weakness. So what we have programmed inside of the Orderflows Trader is a way to identify these thin prints in the bar. And not only that, but, highlight them as well as, draw zones out from them and identify even bars that have more than one thin print. Generally markets, markets that trade a lot of volume, E-minis is a perfect example, do a very good job of distributing volume throughout a bar. Okay, because generally at every level you're going to get a couple hundreds, even thousands of contracts going through. But what about those areas where there's essentially very little volume going through, right? And you could see here, this is what I was talking about earlier, right? You got the zero print right here inside the bar. Market sells off, comes right back up, gets one tick past, and then has a nice sell-off, right? Here, again, another zero print coming in here. Get one tick past, and then sell-off. And sometimes right immediately in the next bar, it comes right back and sort of fills in that poor order flow as it's what's happening down here with the 0, the 1. Now, just really quick, again, depending on the market that you're trading, okay, this is E-minis, okay? So for example, I'll just show you the settings really quick. Thin print, you could set the volume that you want to look at. So for example, okay, I'll just switch over to 10 years really quick. Now 10 years, I don't really advocate using a 1-minute chart. It's a little difficult to wrap your head around sometimes. I like to use a range-based charts on treasuries. And so this is a market that trades generally very strong volumes, right? At each level, you see thousands of contracts. It's a 4-range chart. 4,000, 4,000, 1,500, 1,700, 5,000, 7,000, right? You got a zero here. What happens? You got 1, 2, 3. Right, it's a stack buying and balance, but look at this. This one hasn't been retested. In the next bar, we came in, tested these two. And what do? We came right back down to it 3 minutes later. Now, this happened, I believe, on Friday. We had some numbers coming out, right, which caused this here, caused this bar here, because this is all within the 9 o'clock minute. But notice how it came right down to that tick. But basically, the point that I want to try to make for you with these thicker markets, you don't have to use something like 0 and 1, especially on a market like treasuries, 10 years, that trade, thousands of contracts per price level, per tick, right? So, you could use, where's thin prints in here, a T, okay? You could use something like, 20 or 25 to highlight those areas of thin prints. Here's 14, here's 7, right? In this case, we sold off, went back out within a tick of it, came off a little bit. Even up here, having some movements. So again, you could adjust it to whatever you want. And, again, something like a thin print is a sign of a market that's moving fast, because what's happening is, you have a big order going through. Now, again, like I said, sometimes it's the result of an imbalance in the market, and you can see the physical imbalance, 44 against 1, 97 against 0, etc. But at the end of the day, again, we're so used to looking at imbalances, especially stacked imbalances, that it's a very visual thing for a lot of traders. And sometimes, you're going to get these things happening, these thin prints, without an imbalance, or without a stacked imbalance, right? Because again, if you're looking for, a stacked imbalance, you're not getting that stacked imbalance here, especially if you're using a range-based chart here, right? And you can see there's a lot of great trading opportunities. Let me just go back to the E-minis really quick. Change that back to a simple 1-minute chart, okay? And just get back to Friday's activities. Okay, but again, it's flexible, right? Depending on the market that you're trading, right, it's going to determine on, what you want to identify as a thin print. So for example, let's go back to the cash open on Friday, right? Where are we here? Cash open. Now, again, maybe you don't want to look at, volumes of 9, 10, or anything above that. So you just want to stick, you want to be very specific, right? You want to have just areas of 0 volume in the two-way auction. Okay, so you just change that thin print max volume to 0. Click OK. Okay. Now there's a couple other little tools we have in here. Thin print, multiple thin prints, right? So you can identify bars that have multiple thin prints. But look at this, where this was right ahead of the cash. Once cash opened up here, look at that. We went up, came right back down where we had this thin print, got a couple ticks through, had a nice move up, right? Thin print, 1, 2, 3 thin prints. You'll notice, right, this bar's got this green box around because it's got multiple thin prints in it, right? Again, these, in this case, I set it to 0, right, which is the lowest you can go. Obviously, you can't go negative. You can't have negative volume in a bar. Here, look at this, couple more thin prints in there, 2 more, and there's one here, right? There's one there, okay, as the market is selling off. Again, I like to have thin prints where the market doesn't retrace back into it, right? Because there's 2 ways to trade it, right? You could trade it on a pullback, right? You just drop in a limit there, have a 2 or 3 tick stop, and look for the pop up, right? Because basically you're looking for this order flow to be repaired. Or once you have your thin print printing, then you know you got some momentum in this market. You could look to get short as soon as you start trading below the bar with a thin print in it, if it's a short, or above, to get long above the bar with a thin print in it, right? Because look at that. You could have got long in here, off this bar, obviously this bar here, but you'd rather be getting long earlier down around the 64, 65 area, or even 67, than getting long up at 77, right? Because you want to be positioned to catch this move here, all right? Even here after the cash open, right? That was Friday. Let's take a look at a different day, Thursday. Just scroll back here. Similar activity. Okay, where's the cash open? Okay, here's the cash open. Okay, this is the 1 minute before, 2 minutes before. Cash opens up here. Got your thin print in this bar. Again, it was coming down, trying to fill in that gap. And then it shot up to new highs, right? Even here, another thin print, right? Maybe you don't take this one because cash just opened. You take this one, right? Look at this bar. There's no other reason in this bar to be getting long other than that thin print. This bar's got your stacked buying, or not stacked buying imbalances, but it's got 1, 2, 3, 4, 5, 6, 7 buying imbalances. But would you have gotten long off this bar? Well, you would have if you understood the whole concept of thin prints. Okay, market went up. Hey, chart. Okay, thin print, bearish one here. There was a bearish one here. It came in, tested it in the next bar, 6 contracts traded, then it sold off. A couple thin prints in here, but we're already selling off. Again, if we have a sell-off from, because people say, well, you got thin prints down here, market didn't go anywhere. Well, yeah, we just sold off from 38 down to 18, a 20-point sell-off. Do you really want to get short? And there's other reasons in this bar why you don't want to get short. Anyway, off that. But you can see how, look at these levels, right? Came down. There's a thin print from way before. Trade through it by 6 ticks. Look at this one. Came down within 1 tick. Just missed it. Just nicked it. Forming your low here. Now you get your bullish thin prints here. Get a nice move up. All right. So, being able to identify the thin prints in a chart, again, depending on the market you're using, this is a E-mini 1 minute chart. If you're using, if you're trading, a different market, again, this is set to 0. If you're looking at, say, I showed you the 10 years, I don't know, crude oil. Let's take a look at crude CL. Again, just keeping it at 0. Okay, again, a night session, you're going to get a lot of zeros, but during the day session, right, you can see you're getting some nice nice movements on the way up, right? You don't have necessarily stacked imbalances coming in on this bar or this bar or this bar, but it's giving you some nice bullish signals here. Okay, so again, if there's certain things that people always ask me, and one of the questions I get a lot is, what's the one thing, if you could put on your chart, that you'd use on order flow? Well, I would use thin prints. Now, again, if you're trading a very illiquid market, I don't know, hogs, HE, on a 1 minute chart, okay, you're going to get a lot of zeros, right? So it's not going to be effective. I wouldn't recommend trading a 1 minute chart with thin prints on hogs. I'd probably try to aggregate the trades a bit more. I don't know, maybe use something like a 50 tick chart or something like that. It's going to give me a little bit better price movements, etc. Or even if I was going to use something like, I don't know, a 4 range, 5 range chart, maybe. So anyway, there's different ways to play around with it. But again, having that on your software is a great tool that you can use, to identify these areas of lack of volume going through in the market. So thanks, everyone. I'll see you guys on the next video. Bye-bye.